All right, we here. Welcome to this Mailing Up News. All right, we're gonna go ahead and get it started. All right, today is Monday. Today is Tuesday, October 13, 2020. The time is 3:45 in the morning at the time of this interview, just before I head out to work. All right, so we're gonna get started looking at these stock market, the futures markets. All right, the S&P futures are down about 21.25. The Dow futures are down 173 even. The Nasdaq futures are down 52 points even. All right, and the Russell 2000 futures are down 15.40 even. All right, so it looks like most of the future markets are open, are set to close, set to open up, then operating in the red. All right, that could change from the time. All right, so we're looking at crude oil here. Crude oil is up 8 cents to about $39.51 a barrel. All right. Look at some currencies. The euro to the US dollar is down about 0.0025. All right. The 10-year bond is actually at sitting steady at 0.7770. All right. The VIX is up about 0.78 to about 25.81. All right. Some more currencies. The GBP to the US dollar is down fluctuating about 0.003. All right, the Japanese US dollar to Japanese yen is up about 0.30 apart, just about 13 cents, floating around between 13 and 12 cents. All right. Okay, and the Nikkei 225. Okay, now we keep going with the cryptocurrencies. We got the US dollar to the US dollar, Bitcoin to the US dollar, 101 is up about $104.19. All right, to about $11,461.20. All right, the CMC crypto is down $7.39 to about $235.95. All right, and wrap it up with the markets. The futures, the FTSE 100 is down about 29.51 at the time. Remember, the European and Asian markets open right now, and the Nikkei 225 is up about 43.09. All right. So that was brought to you by YahooFinance.com. All right, that was YahooFinance.com for a look at the markets and currencies and cryptos. All right, let's get into the precious metals. Okay, that we switch over to Kitco.com. All right, Kitco.com. All right, we take a look at some. We take a look at the world spot price that combines all the major markets. Okay, right. So right now, gold. The asking bid for gold is down $4, and it is asking price is $1,918.90. All right, silver is down 23 cents to the asking price is $24.96. Platinum is down $9 to $896 even. Palladium is up $7 to $2,471 even, and rhodium is unchanged at the asking price is $12,800 even. All right. And if we will go to the gold ratios per gold, for 1 ounce of gold there is $77.15 ounces of silver. Platinum is 2.23 ounces per 1 ounce of gold. Palladium is 0.83 ounces for 1 ounce of gold. All right, so that was brought to you by Kitco.com. All right, look at the precious metals markets. Okay, Kitco.com. All right, let's get into the actual financial news. All right, we're getting to the financials. Let's get into YahooFinance.com. Going back there to this news about the Fed. A $10 trillion Fed balance sheet is coming. All right, as a $10 trillion Fed balance sheet is coming. All right. Bloomberg opinion. This is the first two columns. Examining the extraordinary actions of the Federal Reserve has taken to support the economy during the coronavirus pandemic. All right. The consequences for the central bank's financial conditions and balance sheets. The Federal Reserve balance sheet is exploding, growing about 3 trillion since mid-March and now totaling more than 7 trillion. It conceivably exceed 10 trillion by year end as the central banks buys corporate bonds, municipal securities, and makes loans to medium-sized businesses, while purchasing 80 billion of treasuries and 40 billion of agency mortgage-backed securities or MBS. All right, each month. This would be more than double the peak that the Fed's balance sheets reached after the 2008-2009 financial crash. All right. So we get down into the little article a little bit more. All right. All right. So what should it make this rapid growth? Due to the Fed's asset purchases represent monetization of the federal debt. Will runaway inflation be inevitable consequence? Yes, it will be. All right. All right. So we're getting some of the implications. All right. All right. The second implication was that the private sector will now hold more cash than deposits than before. This is nothing. This is noting the private sector can do about this collectively. For example, try to exchange my cash for other physical or financial assets, the seller now has the cash. It does not disappear. It is just reallocated. All right, the third implication implicates that the private sector may react to the increase in cash and deposit holdings forced onto it by the Feds by seeking other riskier, higher yielding assets. In fact, this is a major motivation of quantitative easing. By reducing the supply of safe assets and increasing the amount of deposits that the private sector must hold, the Fed regenerates a demand by the private sector for more risky assets. The result is a rise in financial asset valuations and an easing of financial conditions. The Fed assets purchases for asset purchases change the mix of assets available to be held by private investors, as this influences asset valuations. All right. What they're not saying here, all the family, basically the Fed is going to be buying more and more stuff. All right, and forcing forcing the private investors, us family, to get into the risk money factor. But here's the thing: the more money that they pump into the economy, the less your purchasing power is. All right. And then on top of that, family, we go over to www.ponline.com. That's PI online. All right, PIONLINE.com. All right. All right. Here's the article. Much more QE needed to offset zero balance, Fed Economist says. All right. That is much more QE needed to offset zero bound, Fed Economist. All right. The damage of COVID-19 recession will be doubled by the Federal Reserve's inability to cut interest rates further unless it employs massive additional asset purchases, one of the central bank's top researchers said in a paper. Bond purchases equal to 30% of the U.S. economy output, or 6.5 trillion, are required to offset the impact of the Fed's benchmark rate already being nearly zero, wrote Michael Caller, a senior Fed economist and director of the bank's Financial Stability Division. All right. If it was so sound, why you need a bank stability division? All right. That means you're doing some shady stuff, and you gotta create another sector of a banking firm, a section of the banking to make sure the bank is stable. All right. The Fed has so far purchased bonds through so-called open market operations and emergency lending facilities equal to about 3 trillion since March. This implied another 3.5 trillion is needed in Mr. Kylie's review to make up for the monetary policy handicap of zero rates. All right. All right. So far, let me go down to the article a little bit more. So far, one policymaker, Cleveland Fed President Loretta Minster, has said she might support shifting asset purchases more to longer day bonds. She did not favor increasing total purchases at this time, nor have any of her colleagues publicly advocated for such a move. are declining to rule out. So they might not be saying for more QE out in the open, but they're definitely talking about it amongst themselves in private meetings. All right. All right, and switching topics over to the what's going on, family. All right, we're going to the www.activistpost.com. This is coming from the activistpost.com. All right. Global food shortages are becoming very real. U.S. grocery store chains are preparing for a worst-case scenario. All right. The head of the UN World Food Program repeatedly warned us that we will soon be facing famines of biblical proportions. All right, and these predictions are now starting to become reality. We have already seen food riots in parts of Africa. They love to jump on Africa, but it's probably more started in where they come from in Europe and everywhere else before it even hit Africa. All right, and it isn't much. And it isn't too much of a surprise that certain portions of Asia are really now hurting right now. But I have to admit that I was kind of shocked when it came across an article that the hunger crisis that has erupted in Latin America. Alright, according to Bloomberg, a resurgence in poverty is bringing a vicious wave of hunger in regions that was supposed to have mostly eradicated the most kind of malnutrition decades ago. But we are being told that food shortages are becoming acute across Mexico City, all the way down to the southern tip of South America, and those that are the poorest are being hit the hardest. All right. Fortunately, the vast majority of my readers are just as hypothetically questioned, but for many families in Latin America, the unthinkable is now actually happening. All right. So basically, the world is heading to a food shortages. All right. Prices are jumping, currencies are crashing left and right, so it's causing food prices to jump. Everything is costing much more. Farmers can't get their prices to market. They're having to dump food because people are being laid off. No truck drivers are able to get there. All right, and it's causing everything to skyrocket left and right. Uh, with all this being said, things are getting bad out here, family. All right, it may seem like things are getting good, but trust me, the thing we can here tell you that looking at all the big picture here, things are getting bad. Things are getting going from bad to worse. All right, family. We need you to be safe out here. All right, please be safe. And what we can tell you that one of the reasons why things are going from bad to worse now because world debt is being called in. All right, many of these kind of people, these so-called elites, have ran a debt. They ran afoul of all these hedges that these debts they've been placing. These derivative trades are not coming in properly, and they're now owing. So now world markets are now hurting left and right, and it's causing shortages everywhere. All right. All right. So, that being said, family, we'll go to our final story. All right. From ZeroHedge.com. All right. This is from ZeroHedge.com. Is Joe Budden about to send silver soaring? All right. One of the key market dynamics over the past few months has seen traders seeking the best option in their portfolios for the outcome of the presidential elections. Here we've seen a tug of war between tech stocks. All right, a bet on continued deflationary forces and lower yields. On one hand, the small cap value names which have seen some modest performance in recent days, as a Biden victory has become synonymous with reflections and the stock market upside, with Goldman speculating that as much as $7 trillion in new fiscal stimulus may be unleashed. All right, deposits some. All right, deposits some $4 trillion in tax hikes on debt, including both corporate gains tax increases. All right. While the broader deflationary and reflation and deflation trade has been widely discussed, and there is some else here discussed here and elsewhere, on more targeted trade that has seen less coverage in the media has been the convergence between legacy energy sector, represented by the S&P energy sector, and the most easily observed by the continued slide in energy titans such as Exxon, Chevron, and clean energy. The thesis is simple. The Biden administration will seek to punish dirty energy names while encouraging green solar or energy development. And a quick look at unprecedented performance in legacy energy versus the Titan Solar ETF. The tan solar ETF. All right, just show how divergence positioning in this trade, such as early in June. All right. All right, we skip down here in the article a little bit. All right. So of course, the aggression expansion of solar facilities will mean mean for more demand for silver. The insurer Goldman calculates that silver demand should see decent growth over the next 3 years, although this could be significantly boosted should the Chinese and Biden-driven renewable acceleration happen. All in all, Goldman concludes that over the next 3 years, solar should boost silver total industrial demand by 2%, in the base increase by 9% in a bull case. All right. So with that being said, family, we got an article here that basically saying get ready for a new wave of energy coming out, technologies that will cause silver prices to go up. Cause silver is an industrial metal. All right. Once you use silver, you can't get it back. It is gone forever. All right. It is pretty much gone. All right. Gone forever. All right. So with that being said, family, I want to thank you for joining us. This is Melanated Economic News. This was a long and lengthy topic, all right, family, but it needed to be this way to get the news out to you, all right. Take it easy, family. Take it easy. Take care of each other, and stay safe out here. All right. Once again, thank you for joining us. Another edition of Melanated Economic News. All right, family. Remember, be your own banker, be your own savings and loans, and be your own credit union. All right, family. Be one forever, without question. Let's get it started.